Hey, everybody. Tuesday, March 7th. Lovely day in the market. Micro S&P again. Left to right, midnight to midnight. Full range. Again, constant volume bar chart. Every bar, equal amount of contracts traded. N is new high. F is failed high of resistance. F of support, failed support. New support is the ends. Price failures are the little P's. M's are matches. Again, all of the labels and information that you're seeing on the chart comes directly from the bars. There is no outside indicator that is used to make calculations or to interpret anything that's on the chart. Background color changes are taken directly from the bars. Everything is as you see it, just as simple and as clean as you can possibly get. And as you can see, white is up, green is down. You can see that, after early morning hours, like I said, I usually start watching the market around 8:30, which was right up here. The market consolidated overnight and then broke out to the downside. Confirmed that move down, dropped again. Price moved back up to try to test resistance and failed. At this point, we're making lower highs and lower lows. Comes back down, breaks through support again, goes up, tests resistance. Momentum switch back up, failed resistance, broke back down through support again. Went up to test resistance again right after lunch, broke through the last resistance. I'd kind of give this a toss up at this point. Yes, this was last resistance because it was the color change, but it was weak at best. This was more of a decisive challenge of the last resistance there in the morning. But regardless, we don't assume, we just read the bars, we just read the charts. New resistance, so we can see the weakness here as it dropped. Right back down to new support again. Failed resistance again, new support again. Going into the close, it took out a little resistance, but we're not, if you're trading in the afternoon, you're not trading after 3:30 anyway. So there's all of the movement for the day. Now we're going to review the trades. A little bit different than yesterday. Yesterday was, there was a little bit of money in the morning, a little bit of money in the afternoon. But let's see how that played out. Out of that consolidation in the morning, it immediately dropped. There was your failure. There's your confirming bar. There's your drop. There's your exit on your red bar. Goes into consolidation here a little bit. You see this. You get two price failures back to back here. When that occurs, you're in consolidation. And so the short here was suspect. But you take it, it's a ding, 0.75. That way you're not arguing with the trade setups as they play out. Then price goes up, fails, takes out that price failure, goes up and confirms. And like yesterday afternoon, that absolutely picture perfect failure. There's that failure of that last resistance and boom. When that thing dropped 32 points. Now, comparison to the S&P 500, that's about a 1,500 point drop. Here in the micros, 32 is $160. Now, I just want to say something. When people go, "Oh, the micros, they don't trade much," whatever. That's 160 points or $160 per contract. That means that your margin that you use to make that money, you used $50 margin to make $160. That's a 300% return on margin. And it didn't cost you anything other than your commission, and the micros is negligible. So again, we're just playing this out. Noon is right here. So that's the last trade of the day right there for morning. Morning was 33.5. Again, that trade by itself was 32 points. So you're looking at it here, it dropped. We had a little losing trade here in consolidation. It broke off. There's your price failure confirming the move up to the new high. And your exit, there was a 10-point move. And then you got ding 3 losing trades going into the pullback and a consolidation. You had one buy trade that was a loser and 2 little short trades. And then you're at lunch and you're looking at it and you go 33.5 points at lunch. The one move down again was 32 points. Hey, there's $175 for the day per contract. That's all that you really, really need. Now, if you're going to trade the rest of the day, let's look at it. You gained another 4.5 points, but you had a little winner here. Excuse me, that was in that before lunch. So you had a loser, 2 losers and 2 winners after lunch. And that, again, 4.5 points net. So you make the determination on whether you want to trade afternoons. Personally, me, I look at it and say that I'm going to trade every morning, that 8:30 to noon window. I got the rest of the day. If something special sets up, or if there's a big block of news, or, somebody in our government acts really stupid, which happens all the time, then I might, hang around in the afternoon to be able to take some trades. This week, we've got some news coming out later on in the week. We'll just have to see it and play it by ear. But there's the day in a nutshell. Again, 33.5 points morning, 38 points all day. So again, another day of confirmation of should have stopped at noon and walked away. But hope you enjoyed this. Again, my name is Bill Shamp. This is Price Physics. And if you have any questions, give me a shout.